All right, we should be live here. I'm going to make sure that we are. I'm going to create the broadcast for Twitter. I'm going to post live now. Learning ranges and trends. Kyle Dupes. I always forget these. I should really have this like in a spot. That's good. Cancel. I think that we're live here on YouTube as well. I'm trying to get the tweet out, and I need to make sure that I am tagging the right people. And it's very difficult for me to always remember everyone's at. I'm the worst at it. So at Crypto School. This is because like, oh, crypto. Okay, that's pretty easy. Crypto Banter, Crypto School. Okay, that one I can remember. And then Crypto Banters is like something else as well. So let's see here. Okay, at that. And at Crypto _ Banter. Yeah, I should remember that one because I've got the underscore as well. But you know how it goes. Boom, there we go. Let's post it live. Now we're going to go to the live here so I can get the chat going. And once we have that, then we will have everything that we officially need to get the ball rolling. I think everything's working. Let me know in some way if it's not, either in chat and or Telegram, wherever you guys are listening from. Sonia, how's it going? CP Sonia. CP Sonia. Can you hear me? Is it all coming good? I appreciate you jumping in here quick. You're the first one. Let's see, we do have chat here. I think that we're going to have chat down for now, maybe, because I think that when it goes, I don't have space for it on the screen, but we'll try. I actually do want to get it, especially because you guys yesterday were asking crazy good questions during Kyle's course. So I do want to see all good. All right, well, let's get it rolling. What up, Mac? How's it going? We're just going to get right into it. We're learning ranges and trends today. And then, I don't know, maybe we'll just hang around. Maybe we'll, thank you, Sonia. What up, Atabola? We did have some winners from last week's stream, or from yesterday's stream in the, what giveaway was it? Was it Rizzo? We gave away Rizzo, and I believe that we had a few winners, and we're going to have some more winners. Don't worry, I have names down for people who are in line to win some money from projects that reach out. What up, Crypto Boy? How's it going? I believe you were one of the winners too. So this is great. We're going to dive into the ranges and trends, and then we might try to do, maybe we'll scroll Twitter, maybe we'll listen into what people are talking about, see what's going on for the day and hang out. I don't know how long it's going to be, but I am going to be starting to stream now at this exact time daily, unless something changes, but I believe that this is going to be the time. Atabola, Debola 123 here. I'm taking notes. I have a list of individuals who are very supportive. And last, it was T-Done won last time, and Zane won last time. And then people that haven't won, it's at Debola 123. I think that's it. So I'm taking some notes. Okay, Mac, we are going to learn and we are going to earn. We're going to dive right in
trade.
Right
and
now.
At any given point in time, when you have a look at the chart, price will be either capped in a range or it will be caught in a trend. So understanding the difference between the two is absolutely crucial.
Turn him up just a little bit. I'm also going to turn chat on here, and I just might make it a little bit smaller, which might make it hard to see, but at least you guys will know that it exists. And your guys' hard work is actually being utilized. Adam, how's it going? Aladdin, thank you so much for reposting the stream. It does help quite a bit in whatever algorithm they've got going on. They've got cooking. If you guys haven't seen, this course is pretty long. It was like 35 minutes, and usually when they're like 10, 15, 20 minutes, it takes us about an hour. So this one will take us a little bit of time, but I think it's an important one. I think it's an important one to kind of run through. Cloud Deli, what up? How's it going? I think it's an important one to get through because we're talking ranges and trends, and understanding those ranges and those trends is really what's going to help you make the most amount of money that you possibly can, because you can't fight those trends.
Approaches
you
will
really
require different strategies to execute on. So if you have a look at the chart that's in front of you, This is an example of how the market moves in various phases. Now, this is Bitcoin on a high
What up, Nick? How's it going?
Scale. And whether you're looking at a 5-minute chart, a 10-minute chart, a 1-hour chart, daily chart, weekly chart, or even a monthly chart, the same will be true, which is this. The market ranges.
What up, Priest? What up, Rich?
Breaks out of that range, starts to form a trend.
The whole crew's rolling in.
That trend comes to an end. It creates a...
Maybe what we should do is we should just start a hedge fund and we all just trade. We have one wallet and we just cook. We'll be like JP Morgan, BlackRock. We will be Fidelity. Day's going great. Crypto boy, thank you so much for asking. Hope your day is going well.
Again, you break out of that range, create another trend. In this instance, it's an uptrend. That trend ends. It goes into a downtrend, a range, an uptrend, a downtrend.
You know what I noticed about this? And trust me, you guys know we're learning together. So I don't mind asking and saying dumb things. You know what I kind of notice when you look at stuff like this? Doesn't it look like kind of when you look at a chart like this, it looks a little bit easy. Orion Lee 43, shout out to you. What up, Murtala? Rich, everybody goated. When you look at it like this, look, you can honestly see, like, if you could see that, like, the green candles, they start to get a little bit, like, they start giving up steam. It's almost like an engine that's going up, it's an engine that's going up a hill, and it starts going a little slower, and then it gets to the top of the hill, and you can see it starts going down, right? And it starts slow, the candles get a little bit bigger, then they get small again, and then it starts going up. You know what I mean? Murtala, I do notice you. I actually take notes. I'm not kidding. Everyone that's in here chatting, I take a notes. I literally have a notes section. If I could pull up, if I could do it easily, I would. But I feel like the notes section doesn't pull up so easy. But I have a note here of everyone who I know is supporting out there grinding and deserves extra attention when it comes giveaway time. And like I said, I am very often Khalid Murtala 5. I'm very often whenever projects reach out to me, I'm telling you, I really try to make sure that they fund some of the community wallet for giveaways. Adam, you are in the notes. You are right there. I see you. Oh, I was adding to the wrong section though. Hold on. I have to go here. Oh, excuse me. I got something in my throat. But those are the winners for Rizzo. So I make sure that I'm not like doubling up too much. You might win on random. So what I do is oftentimes I have some that win random and some that just win from the notes. Mac, you're yeah. Here we go. We'll take the first part. We'll just update the notes. Who do I have right now? Zane. They won yesterday. Boom. So they're getting the X's on the notes. I've got Adam. I've got Debola. I've got Promise Soul. I've got Khalid Murtala. Let's see. Where you at, Mac? Mac 59449091. Also, obviously, assuming you're not a bot, which I know that you guys are not. We got C-Pies. I know that you've been out there supporting and grinding. You definitely get into the notes section. C-Pie Sonia. I noticed you guys active. Boy T Space, you've been super active. 100%. We're getting you guys in there. You got me. Oh, Raj. I know Raj from way back in the day. Raj Bunty 007. What about me? UT Arc. Yeah, we'll get you in there. And it might take a second. Honestly, it might. Because what I like to do is, like, for Rizzo, for example, I like to split it up. And there were 5 people that won. No, UT Arc, you didn't get faded. Don't worry. You're in there. You're in there. Cloud Deli. All right, I'll get you in there. Cloud Deli. Then we'll do the applications for tomorrow as well. But usually I try to get projects to fund. They'll say, hey, we'll pay you this amount of money to do something for us, right? Data services to help them build decks for tier 1 exchanges, content, video, whatever it is. It can be anything, right? And when they come to me, hey, look, that's great. Whatever. You guys saw that Zach XBT thing. I'm going to start putting disclaimers for projects that I work with, which I'll talk to you guys about in a second. But I say, look, I'm down to work with you. Whatever. If they're going to give me, it doesn't even matter. Call it $250 for stuff. I'm just going to say that as a number. I say, instead, give it to the community wallet, and I will do a giveaway so that the money can go back to the people who are supporting me and making any of this stuff happen. You know what I mean? Like, I'm not just going to sit there and be greedy and just like absorb, oh, give me 250, 500, 1,000, 5,000. There's no point in that. Like, there's literally no point, because the only reason that projects even come to me and want to work together is because of you guys. And I think that too many people forget that. The only reason, I gotta say it again, because now I know we're learning ranges and trends. I know we are. But now I'm on a tangent. I see too many people out there who post the same stuff over and over. Oh, GM, go buy this project. Go buy that project. Go buy this project. Go buy that project. And they actually don't care about what they're talking about. They just say, go buy this one. Go buy that one because they get paid to do it. That's what Zach XBT is talking about. That's what he knows. And so for me, the only reason that I'm able to even have projects want to work together, which I love to support good projects. You know which ones they are. You know there's many good ones. You're in many of them. Shout out Rizzo. Shout out Ponky. Shout out Brett. Shout out to some of the smaller ones. Fefe. Fefe is one of the most supportive projects out there, right? We got Nabico. We got that long cat. Shout out Mr. Boss. What is the point of taking money from a project, talking about it in a few tweets, and then having them rug the project and steal money from you guys? I think it should be the opposite. You want to work with me. The only reason that I can have any success is because everyone that's in this chat right now, all of you guys. So why don't you guys get money from it? Right? Well, that doesn't make any sense. Why would I get money because you guys are supportive? You guys should get it. And trust me, I want to get paid too. I'm a capitalist, man. I want all of us to get absolutely filthy rich this cycle. I do. So I'm not against making money. Trust me. I get paid fine. I'm totally fine. So when projects come to me though, and they'll say, hey, we'll give you this. I say, that's fine. But also I want this that goes back to the community. And if they don't do that, either I don't work with them or I'll just fund it out of my own pocket. I don't care. It does not matter. So we do have a long list of people here. I'm actually going to put this list of people for giveaway. There you go. But that's what I think. And honestly, I am just appreciative of it. It is what it is. You know what I mean? So like, I'm going to try, and as the market comes back, there will be bigger opportunities for bigger giveaways. You know, I know everyone's asking, how long is this bull market going to start or continue for? It's a guessing game, right? My personal thing is like, I plan for the worst, but hope for the best. I hope that it continues for a very long time, but I'm going to talk about taking profits and learn to trade and learn to short and do all those things so that we can collectively together make money. And how I view it, I don't view it as PvP. I don't view it as competitive, but if all of us are learning to trade and do better, then we are going to make more money than maybe some other people who are being led over the hill, over the cliff, as they say, by people who maybe are just taking whatever comes their way to shill it. I'll tell one more quick story, then we'll get into ranges and trades. I do see all these chats. I wasn't looking too much at the chat right then because I was in my philosophical deepness, but I do see all of you guys, and I appreciate each and every one of you guys. I'm scrolling through it right now. Much love. I had someone when I was first starting. Yudi asked, great question. Are you teaching perps today or just memes? This is actually going to be range trading. So we're going through the whale course, and there's like 17 courses. We're on course number 7, ranges and trends. If you haven't seen the first few, at your leisure, I'd encourage you to go look. We are going to do some reviews as we go along, but we're building on like candlesticks, candlestick structures, chart patterns, risk management, things like that. We will get into perps trading. I love perps trading because I don't want to say it's easy. It's not. But if you are understanding these things that we're going to talk about right now, trends, for example, the trend can be like a 10, 15, 20% trend, which doesn't sound like a lot, especially in the trenches when you're looking for like a 10x, 50x, 100x. But then with leverage, all of a sudden, it can get much better. And so we'll dive into that, of course. So, oh, shoot. I don't know if it, my internet sometimes goes out. It says that I'm not dropping any frames, but if I drop a frame or two, hopefully you guys can keep on hearing me. But yeah, what I was going to say is that there was someone who is pretty big in the space who was giving me advice. This was back when I first started into memes because I'd been trading Bitcoin for a long time, but I got into memes because everyone's way cooler. Like there's none of this happens in Bitcoin, by the way. Like all of us together doesn't happen in Bitcoin. In Bitcoin, what happens is And here I'm gonna let the video play
This
just with no sound in the background, so it actually looks like something's happening. And then we'll go back. Don't worry, we'll go back in time. I got into memes because the community aspect of it was really fun. It's just fun. Like, you don't have fun trading Bitcoin. When Bitcoin goes up, the Bitcoin people are mad that they didn't buy more. When Bitcoin goes down, the people are mad that it's going down. It is what it is. I am a Bitcoin man. I love Bitcoin to death, but the people, man, they could take a deep breath. So someone who, when I first came into memes, Big K-Wall, you guys don't even know. I've never talked about him for a variety of reasons, mostly because I don't vibe with their energy. But what they said is, look, you want to be a call channel. Your goal should be, forget about teaching, forget about data. None of that matters. People, they're not even smart enough to understand the data. Don't even think about it. Just call tickers. Projects will pay you to call the ticker. You make a tweet about it. You sell it. And then you move on to the next one. That's how you're going to be the most profitable. And I said, wait, but doesn't that just steal money from your community? If you're just posting things that you don't even believe about, you tell them to go buy and then you sell? Oh yeah, that's how the game goes. That's what you should do. No. There was no chance that was how I was going to do it. And by the way, the data aspect of us looking and learning, there are so many people. There are so many people here who are smarts. Like, I don't understand this idea when people say, like, oh, the degens are dumb. They're not. That's not it. That the Twitter algorithm really, really tries to cook you in a significant way by playing on your emotions. And Billy announcement winner date will be probably Wednesday, maybe Friday. I have to look.
In this video, I'll show you how to markets can range and markets can trend. And
okay, we'll pause him for 1 second because I'm almost done with my tirade. But so, like, I met so many smart, talented people. I see a lot of them in this chat that were in memes. They can understand. It's not like you guys are not able to understand. The problem is the algorithm's built to keep you and me and everyone else who's not, like, really, really deeply into it poor. And that's why I like to work with projects who, I'm not saying every project will go 100%, but I at least know, for example, Billy, I at least know the guy. Someone vouched for him. Should be a good project. They have some plans. It's at a pretty low market cap. Okay, cool. We're going to give it a shot. And by the way, I am not going to tell you to diamond hand to a billion Valhalla or you're a Jeet while I'm selling on you. I am going to say, wow, that's amazing. You made a 2x on Billy. I hope you get your initials out. So now there's no way that you can lose. Wow, you're up 3x. I hope you get your initials out and 50%. So now you have some money in your pocket to pay off debt, to pay for rent, to retire your mom, to build up your portfolio, to roll into conviction plays. That's what I'm going to tell you. I'm not going to be the one sitting here saying, hold. Oh, diamond hand this, diamond hand that, with no reason. That's why the data matters. So I'm gonna get off the rant now. I'm taking a sip of water. I appreciate you guys sitting through it as we let the room fill up. But we're going to go into ranges and trends now. These are very important lessons. So yeah, pretty small bag. Like, honestly, I swear to you, if you do $20 and it turns into $40, I will be the first person shouting at you to sell at least a minimum $20 worth so that you now have your initial $20 and you still have $20 just in case it continues to go up. And I would not even be mad in any way. I would applaud you. I would clap if you said, I sold all for $40. I made a 2x and I'm super happy with that. I would, that's me applauding for anyone who's been able to do that. So anyways, we're going to roll ranges and trends. The chat is up in the top left corner. You'll see it, but it may have to go because it covers up some stuff at points.
Any given point in time when you
I do want to check
at the
this
chart,
out.
it will be caught in a trend.
Ranges and trends.
So understanding the difference between the two is
and then I'll talk about the point that I was going to make before I went way off on the deepest of deep
absolutely
tangents.
Crucial because
shout out to Kyle
both
Dukes. Shout out to everyone in chat. Aladdin,
different
Matala,
strategies
Sonia, Priest,
to
Adam,
on. So
Boss,
if you have a
James,
look at the
Mr.
chart
Boss,
that's in front of you,
Mac.
This is an example of how the market moves in various phases. Now, this is Bitcoin on a high time frame scale. And whether you're looking at a 5-minute chart, a 10-minute chart, a 1-hour chart, daily chart, weekly chart, or even a monthly chart, the same will be true, which is this. The market ranges, it then breaks out of that range, starts to form a trend. That trend comes to an end, it creates a downtrend. It then begins to range again. You break out of that range, create another trend. In this instance,
So this is what I was going to say before I went away on the tangent. Let's see if I can actually do this. Okay, good. Paint is working. Okay. So what I was saying though is like, if you look at the chart, like just take a look at this chart real quick. Like you can kind of see it's like going up a hill, and it's like, it like looks like it's gaining steam. But then once it starts slowing down, I think of it like a hill. Like you're going up a hill with a lot of speed. So it starts, you know, you're going up the hill faster, faster. And then it starts slowing down. And so if you look at it from like a paint perspective, I like to just do stuff basic so that we can learn and understand together. But like if you have, you know, these candles, right? We have these candles. Okay, that's a green candle there. A little bit bigger. This is hard to see, I'm sure. Zoom in a little bit. By the way, my art skills not great. That's why I am in the data services section. So if you see like something like this is the one that he's showing, you can almost visually just like see it, right? Okay, that's actually not how they go, because they go more like this. Okay, it's going up. Going up, 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 up like this. And then all of a sudden they start getting a little bit smaller, a little bit smaller, a little bit smaller. It's like you can kind of see. You see, like you can visually see it's going up. Oh, the candles are kind of coming. And then boom, now you have a little small red, right? Then a little bit bigger, then a little bit bigger. Then all of a sudden they start getting a little smaller. And this is why probably our pin bar candlesticks matter. Then you get this. And then all of a sudden, you start getting green again. You know what I mean? Like visually, if I look at that, I just drew it. And that's exactly what this looks like here to me. This entire like path up and down. So it's funny because I feel like you can visually see, if you're like following these charts and paying attention, you can actually see this trend start to happen, even if you're just like visually looking at it. So we're going to learn how to, of course, make money on it. And that's the last time that I'll pause for this section. I'm going to let him talk now. I'm going to let him cook up. But that's what it looks like to me.
That trend ends. It goes into a downtrend, a range, an uptrend, a downtrend, and a range. And this cyclical pattern is present regardless of which time frame you're looking at. So it's important to be able to identify where the ranges are, where the trends are, and then apply the correct strategy. So what exactly is a range? Well, a range is essentially a consolidative pattern whereby price is capped between an area of support and resistance. Remember, an area of support is that horizontal line which we covered in previous lessons, which seems to hold price up, and resistance is the same horizontal line which acts as resistance, stopping price from pushing through into the next major level. Now think of it like a ping pong ball bouncing between those two levels. If you implement the correct strategy, you can make money both to the upside and the downside. And these ranges are present all over the place, easy to spot, and create ample opportunity for you if you are looking to make money that way. When price breaks out of that range, typically is when you start to see a trend. Now, what exactly is a trend? A trend is essentially an area whereby price is backed by momentum, moving either in an upward or downward fashion. An uptrend is a price action whereby you see higher highs and higher lows repeatedly over time. So at least 3 times or more, 3 higher highs and 3 higher lows will start a trend.
Okay, so some things. Atabola says, I need to work on my art skills. I absolutely do. I am the expert.
And if it's to the downside,
I'm the expert of like stick figures, so I really can't draw. Adam says my art skills are fire, so I appreciate that. That's what I'm going to take to heart. Thank you so much. I need to draw some pictures and put them on the refrigerator. I don't know if they do that in every country, but in the U.S., if you do something, you know, beautiful, when you come back from grade school, they'll put it on the refrigerator. Isco, I do have you on the list of people who are supportive in chat for giveaways. There's a lot of people there now, so it may take a second, but you are absolutely on there. I wanted to say, so he said something good there. I'm going to go back just a little bit so we can hit it.
Action whereby you see higher highs and higher.
This is when it goes from just like a range to a trend.
3 times or more.
3 times.
Higher highs and
3 higher highs
lows
and 3 lower lows. That starts a trend.
And if it's to the downside, 3 lower highs and 3 lower lows consecutively will create a downtrend. So in the next video, we'll be covering the exact intricate differences.
Yudi, this is great feedback. Use layman terms to describe range. His explanation is kind of complicated. Absolutely. We're going to go back to the paint streets here. I'm going to let him finish this part here,
and
then we're going to talk about it.
I'm going to show you how to
haven't missed too much,
both
Isco.
of them,
you are,
as well as how to trade them. We're
right
going to start off with ranges. I'll see you all there.
Okay, so he is going to go more in depth into ranges right now. but I'm going to pull up Paint and I'll kind of explain it a little bit.
In this video, I'll show you how to double your account.
Bring him up here.
In this video, I'll show you how to double your account.
Okay.
Using a range.
Okay, I'm going to let him play in the background with no sound. Actually, yeah, I'm going to do it in Paint. I know it's great looking at this, but I was going to try to do it on a chart, but then I'd have to find something that's actually like ranging, and I don't want to try and do that on the fly. So when he's talking about a range, all that he means when he talks about a range, Beauty, is what price the coin asset, it could be TradFi, it could be a project, it could be anything, is bouncing between. So if you had Bitcoin and it is trading between $100,000 and $110,000, and every time it goes up to 110, it goes back down to 105, then it goes to 103, then it goes to 100, then it bounces back to 103, 105, 110, and it keeps going back and forth between those ranges. So if we had the upper limit here at 110, 110K, and we had the lower limit here, these are horizontal trends, by the way, because they're flat, which we know are the most important kind. And it goes here at 100K, right? And this chart is just bouncing between it. I'm going to use a different color. It goes down here, it goes up, goes down, does some things, up, down, up, down. So this is range trading. When he's talking about a range, that is all that he means. Now, the range could be diagonal, it could be horizontal. But the reason why this is important is because this shows you when everyone's guessing, right? Like, then they're guessing like here. Like if Bitcoin's at 105 and it's doing something and everyone says, this is it, it's going up, guys, we're so back. We did it. We did it. Here we go. We're cooking. We're cooking. We're going to go to 150 right now. FOMO, everyone in. Go, 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 go. What device are you using for notes? Is that iPad or Mac? This right here is just my PC. And it's just Paint. But everyone will say that, right? You're going to FOMO. You're going to try to get, everyone's going to make you think that these memes are going crazy. You're missing out. You're going to funnel in. You're going to pile in. You might pile in at 105. But if you know the range between 110 and 100, and you see this very, very, very strong resistance at the very top of the range, right? You can know that we're probably not going to bust through this to 150. And even better, even if we don't know that we're going to bust through this to 150, what you might do is you might look at this. Let's go all the way back here. You might look at this and say, okay, I need to see confirmation that we are out of this range. Trading range, trading range, trading range. And then all of a sudden, you see this. And then you have a resistance support flip, just basically meaning this ceiling, this green line that was a ceiling, it was forcing. Look at this. It goes up. Hey, we're going to go to 150. 150 here. We're going to do it. Nope, rejected, back down. We're going to do it. Rejected, back down. Every time it attacks this point here, this 110 level here, it rejects it back down. But then all of the sudden, we saw enough strength, enough people buying to get through. We've busted through here now. We did not reject down. That did not happen. Instead, we broke through, right? Here we go. We're through. And now all of a sudden, when it goes back to 110, it's not breaking back down this way towards 100. It's actually bouncing off 110. It's using 110 as a trampoline. And now, if you're a smart trader, and I'm going back to what you said, hey, let's use some layman terms, ranges. If we're a smart trader, we don't have to buy any of this junk in here. We can wait because we can watch charts and wait for this to happen. And then all of a sudden, we don't mind buying right here at 110 because we've gotten confirmation. We are now, again, not certain, but we're trying to be 60, 75, 80% of the way there. We can buy here and expect this move to 150, right? Whereas if people don't really know what they're doing, they might be buying here on the FOMO. And then, by the way, when it's going down here, they're selling. So they're buying high and selling low, which is the opposite of what we want to do. So in layman's terms, the range is just essentially the prices that the asset is trading between. That is it. And that is a good thing that you said, Yudi, because what you want to have happen is to understand what's going on. And sometimes traders can get very technical and they'll say things that sound really, really big and crazy. But honestly, it's not that complicated for sure. So anytime you have a question like that, I'll try and break it down into really simple terms, because honestly, you'll probably sit there and be like, wait a minute, what? That's it? That's what all these people, when they draw a million lines, they put all these colors and they say all this technical stuff. Basically, you just mean that now we have a good idea that we're going higher. Isco says, so once it breaks, it means it pumps, right? It depends, right? That's what we're looking at right now. Yeah, it may be a little pump. We don't know yet. That's why we're learning this stuff, because there's some breaks out of the range that matter and there's some that don't. We looked at pin bar candlesticks, right? Way back in the day, those pin bar candlesticks, which we love. We looked at that, and if it bounces off of the trend line, then it like means more. But you could have a random pin bar candlestick that doesn't mean anything. And so some traders might look at that and say, this is very important. Oh, yes, we got one. Now I'm going to buy. But us as smart traders might say, it's not that important because it's not bouncing off of a trend. UD teachers can always overcomplicate things. Hey, they got to justify that salary. UD says, thanks. So like Solana is ranging between 170 and 230. Exactly. That's it. Not even complicated at all. It's just ranging between that. And we don't know, is it going to go up? Is it going to go down? We have to look for something else that's going to allow us to make a decision. We don't know. Is it going to go higher? Is it going to go to 300? Is it going to go back to 100? We don't know. But we just got to look at stuff here. So
perfect range
question.
would look like. Now, you simply have your range high,
wait,
which
he
again
drew my
is going
picture.
to be your resistance zone.
I promise I did not cheat. I did not look at it.
That is where you would short sell. On the bottom side, that's holding price up as support, and that's labeled as your range low. And I wrote there, that is where you're long. That's when you want to be buying, right? So you want to buy the bottom and sell the top. If you do this enough times, you can make some serious profits.
Not gonna lie, I'd like my paint option. It looks about the same. So real quick, to not overcomplicate these things, when he's talking about range trading, this is what he's talking about. When he says you short it at the top of the range because you're confident that it's going to go down, and you long it at the bottom of the range. So in your example, UD, where you say between 170 and 230, it would be like every time Solana hits 230, you short it, and every time it hits 170, you buy it, and you just keep doing that. And that's what he's saying. You get 10% on the up, the down, the up, the down, the up, the down. And now you're making money on the sideways chop
along the way. Look at the price action over here.
And then your portfolio
if the range is a 10% range, meaning you could buy at the bottom and get a 10% move towards the top side. Starting with a $1,000 account, you would now be at 1,100 by the time you get to the top of the range.
Says, because we know when it gets
short
rejected,
and then immediately add those profits, but
idea.
in the other direction, you add another 10% by short selling. You've now taken the account from 1,100 to $1,210. And as you continue to repeat this process, you compound the account, ending with a subtotal of $2,143. Now, of course, this is a textbook example. In reality, it's not always going to play out this perfectly. But I did consider what would be a somewhat real life example, in the sense that making 10% on the way up within a range and then 10% on the way down within a range is very, very possible. The question is, how many times will you get to play this range before it breaks? In this example, I labeled 1, 2, 3, 4, and then on the 5th time it broke. This is in line with what you've learned in the previous lessons on support and resistance. Once a support or resistance level gets hit more than 3 times, the chances of it breaking significantly increase.
That's a good thing to note. So like if you're playing this game, right? Dracul, how's it going? There's a narrative online that calls the daily lows. Okay. Dracul, always cooking. Cooked a lot in the Telegram the other day. I don't know what that, Dracul, I'm not sure what that means. What do you mean? Then there's a narrative online that calls the daily lows. Like there's someone who calls it out. Like there's an account we can follow that just says, hey, the lows are in for the day. That'd be kind of cool. But so as Kyle just said, I'm pointing at Kyle because his head is behind our chat. But if a support or resistance is hit more than 3 times, it is more likely to break. So like if you're in a range, you can identify it and maybe you can play more aggressively early in the range because like these parts here, because it's not as likely to break. But the last thing that you want to have happen is you want to get caught in a spot where you're holding the bag thinking that it's going to come back down and then it runs all the way back up. So it's good to make sure, shout out Goku, shout out Boy T Space. You're cool. Just drop a note because I am curious what you're saying because I know you cook. So maybe you could like play more aggressive earlier in the range when you know that it's there. And then when the horizontal trend lines start to kind of get attacked multiple times, then you can maybe dial back. So instead of doing 10%, 10%, what if you did 20%, 20%, 20%, 20%, 15, 15? Now we start doing 10% because we have less confidence in what's about to happen. Or if we know that the trend line has some risk of breaking, maybe we use that to our advantage. You know what I mean? Because then all of a sudden, maybe we're putting off this bounce here. We think that the upside trend line is going to break. Maybe we put more here. Maybe we go 25, 30% here even. Okay, that's too aggressive. Don't do that. But you get the point. You go bigger later than early because it has a chance to break through to the upside.
So keep that in the back of your mind's eye.
Pros and cons
now,
of each.
What you want to be doing when you look at these ranges is you essentially want to identify what's called the discount zone and the premium zone. So think of it like going to a shop. You want to be buying your goods in the discount zone, and anytime that you sell a product, you want to sell it in the premium zone so that you make more money. So typically, when you look at these ranges, you're going to divide it up into 2 major zones. That being the green zone, your discount zone, you're looking to go long. Anytime that price moves into the bottom of that range, you're looking for long opportunities.
But that's where we go all the way back to our risk management. You don't want to get fully liquidated and lose your account.
And anytime that it crosses over that threshold towards the top side of that range is your premium zone, you should know I'm looking to sell that asset and take profit on that trade. Now, this is easy enough to spot when you're looking at an example from a textbook or on a slide like this.
Pause real quick because UD asked a great question. I wasn't super clear. So both Mac and Boy T Space said that you don't need a ton of money to be playing these games, right? You could do it with $100. And what I'm saying is, it depends on your portfolio size. If you only have $100, right, then really you should be playing these trades with like 1 to 2% of your portfolio. That's what I'm saying. So on the risk management side, whether it's $100 or it's $10 or it's $1,000, you're really wanting to only risk 1 to 2% of your entire portfolio on any given trade because it's going to go wrong a lot of times. And you want to make sure that you don't lose all of your money. So whatever that is, UD, I don't know your portfolio size, but if you have $1,000, then okay, cool. You know, you could play 10, 20, $30 because you're going to be making a lot of trades. It's not just like a buy and hold forever, right? That's like earlier in the course, we talked about risk management, which we'll go over, but that's what I mean. So it's $100, $10, $1,000, whatever it is. That's what it is.
Yes, but the reality is that when you're looking at a real live chart, it becomes a lot more difficult because of the noise that the chart has. Now, the good news is that if you can draw a straight line, you'll be able to identify key pivot levels based on what you've learned throughout this course, and that should help you to better define the range. Now, I'm going to preemptively show you why it can be difficult if you have a look at this chart over here. How many triangles do you see? Now, this is something that you may have seen.
Hold on, guys. This is built for us. Hold on.
Seen in the past.
I want to try to get it when. Dang it! I can't get rid of his closed captioning, but hold on. We're gonna get rid of the chat here. All right. How many triangles do we see in here? Give it to us, guys. You 100% Zenith can use the RSI for range trading. It gives you a really good, quick indication of oversold and overbought, and that is something that we are going to go over. Absolutely not today, but we will. How many triangles do we see? Should we ask ChatGPT? Is this where we're at right now? Hold on. We got this.
Maybe already range. Triangle should help you to better define the range.
I'm
now I'm going to
cheat here.
preemptively show you why it can be difficult if you have a look at this chart over here. How many triangles do you see? Now,
Copy.
this is something that you may have seen in the past.
All right, you guys count it up. 18? We've got 18 from Aladdin. I don't know where. Oh, do it yet. ChatGPT. Let's see what ChatGPT gives us. Let's see what you guys got. How many triangles are in this image? Oh, there you go. All right, it's giving us some answers. Max says 20. Zenith says 14. Orion says 18 as well. Aladdin said 18. Okay, before ChatGPT tells us and before this guy tells us, how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 17, 18, 19, 20, 21, 22, 23, the big one, 24, this one, 25, this one, 26, this one. You guys, there's way more. What are you guys talking about? Hold on. Here we go. All right, here we go. Fine. We do this? It's going to be possible? All right. Okay, so how do I like flatten this? Flatten. I want it to move background. Generative erase. Copy paste. And this is not my skill set. How do I make it so that I can draw on top of it? That's what I want. We're going to get this. 305? It might be 30, maybe. There's a lot in here. How do I draw on top of this? Draw. Oh, good. We got it. Okay. Okay, so we have all the little ones for this pencil. We need to wait. We need weights higher. Brushes. Okay, that's better. Guys, we're gonna get this. I haven't looked at ChatGPT yet. I haven't done it. Okay, well we can't really see the weight, but okay, so we have all the small ones. Everyone knows those, so we don't even have to talk about those. Then there's these ones here. I don't know if anyone plays Zelda, but that's the Triforce right there, right? That's a triangle. Then we have these triangles here, right here like this, right? So those are there. See it? It's like right. Then we have it like here too. Then we have the big one, the biggest one. Biggest triangle is like this one, right there like that. How many is that? Oh, I already put it in ChatGPT. I haven't looked yet. So what are we going with? All right, here I'm just gonna mark some of these off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, big one, 23, 24, 25, 26. Am I missing any? Did I get this one? Get these? 27, 28. Oh my God, wait a minute. Do upside down triangles count too? You guys, there's this upside down one right here. Oh my God, there's so many. Because we can go upside down. All right, let's see it. We're going to go away from paint. We're going to see what he's got to say. Go to ChatGPT. ChatGPT says, oh, I got to get the ChatGPT. $27. ChatGPT says 27, which is pretty close to what we were thinking here. So I feel very good about that.
But a lot of people will look at the broader triangle as one. Then you'll see smaller ones within there. That's 2. He has a bigger one, 3, and you obviously have all the little ones in between. The same is true when you're looking at a range, right? When you're looking at a chart,
he's not going to tell us.
Range within a
no
range,
chance, Kyle.
Within a bigger one, 3,
I'm tweeting at him right now. I'm tweeting at him right now.
And you obviously
there's no chance that he's not going to tell us.
It can be difficult if you have a look at this chart over here.
Enough's enough. Hold on. Sorry, guys. This is important stuff. I'm tweeting at him. There's absolutely no shot that he's going to do that and not tell us. Absolutely not. Yeah, there's no way, dude. He's not going to do it.
How many triangles do you see? Now, this is something that you may have seen in the past before, and maybe you already know the answer to this, but a lot of people will look at the broader triangle as one,
and we'll see.
Then you'll see smaller ones within there. That's 2.
I don't want to tweet at him all mad if he
3,
if he didn't.
And you obviously have all the little ones in between. The same is true when you're looking at a range, right? When you're looking at a chart, there could be a range within a range within a range. So for the purpose of this exercise, we're going to keep it very simple, and we're just going to focus on the daily time frame. You need to pick which time frame works. We're going to keep it very simple.
What it is? 1, 2, 3, 4. It's not even the same triangle. Guys, that is literally not even the same triangle. This motherfucker. Sorry for the French. Kyle, come on, man.
And we're just going to focus on the daily time frame. You need to pick which time frame works best for you. As a general rule of thumb, if you're a day trader, you're going to be looking at anything on the hourly time frame or lower. If you're a swing trader looking for less trades, you're going to be looking on the 4-hour to daily time frame. And if you're an investor, you're going to mostly be focused.
Wait, this is actually alpha. I got to save this here. Because we are going to tweet at him. Got our image there, right? But this looks like alpha. So I do want to make sure that we get this also. Screenshot, boom, and dropped into our Telegram. That we always have it. Time frames based on type of trader you are. Sorry, that just looks like alpha, so I wanted to make sure
on the very high time frames like the weekly. The principles apply in exactly the same way. Whether you're looking at a 3-minute chart or a monthly chart, the principles work exactly the same way.
And that was a different triangle.
In the next video, we're going to get into live real charts, and I'm going to show you exactly how it's done. I'll see you all there.
Oh, you will see us, Kyle. And not only that, we are going to find you, buddy boy. Because you did
Now we're going to take a look at live charts to establish.
No, we're not. Now we are going to figure out how we tweeted our boy Kyle Dupes here. Can I just open up Twitter like this? Yes. Here we go. I've already got it ready, guys. We got to craft our tweets. We have to craft this. Can't really see it, so some stuff here. As we know, it's all. What is happening? You know what's happening? I'll tell you what's happening. Okay, here we go. We're going to tweet at him. Hey, at Kyle Dupes. And then we'll put at Crypto Banter Crypto School plus at Crypto _ Banter. Is that what it is? Not Crypto _ Banter. We need answers now. Not hey Kyle Dupes. Dear Kyle Dupes. Goku wants to go aggressive. We're going to find you and demand that you sell. We're going to drag you out of your home. We will drag you through the streets. We did. We asked. We should ask Grok. Okay, we'll ask Grok here. I have a humble request. In your whale school course, you tease us with this question. How many triangles do you see? Dude, I'm bad at this here. I stopped for 10 minutes with some of the greatest minds in crypto Twitter to solve this. We proposed our solution of, wait, how many did we think we found? Shout out to Diamond Fenzi for reposting the stream. It is absolutely appreciated. How many did we say again? My only problem is that I want to make sure that we say something that that we give our answer here. We're going all the way back. We have to actually do it because I want to put an answer in here. ChatGPT said 27. You want to go with 27? 1, 2, 3, 4, 5, 6, 7, 8, 10. The upside down ones. 11. 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. I get 27 too. Okay, I'm going to, yeah, I think we're going to go 27. ChatGPT said 27. I just don't want to get cooked on Twitter from people coming, technically, you forgot all of this. Technically. All right, here we go. Okay. And proposed our solution of 27. Then we returned to your video expecting an answer. I'll make this a little smaller so you guys can see. Yeah. However, one never came. This is unacceptable and must be rectified. Tell us how many triangles there are. If I could spell correctly. There are, or we will be forced to put a curse on all of your trades going forward. You have 1 hour. Is that good? Did we get it? All right, I'm posting it. Cooked. Cooked. You better hurry up. I'm gonna go. I'm copying this. Hopefully you guys already have. Yeah, there it is. Go rate it. Raid this tweet. Very important to get answers on Triangle Gate. Cool. I see what you're saying. Yeah, that way clearer. I'm glad that you came back because you disappeared. I know your phone died, so welcome back. We're cool. We've been just going at our good friend here, Kyle Dupes, giving a little bit of a I don't know what they say. They say in England, I think they say taking the piss out of him. But we need answers. There's no chance that he's getting away with it. Okay, we're gonna go back to the video. Can't say, oh, it's how many triangles there are. Then he had the nerve, the audacity. Do you guys, okay, I'm sorry. This is it. And then I promise we'll go right back.
Exactly how to find the range. And then more importantly,
go back.
How do you trade that range? So if you look at the chart in front of you over here, we have Bitcoin on TradingView on the daily time. In this video,
then
I'll show you
homeboy had the nerve
premiums.
After
you should more
asking us this question.
That's 2. He has a bigger one
to show us
and
this.
If you're an investor, you're going to focus on the daily.
A completely different triangle. Are you out of your mind? Do you think that the internet is never going to let you get away with that, dude? I am way too OCD to not have an answer to this question. I think 27.
Now we're going to take a look at live charts to establish
He's got
exactly
1 hour.
how to find the range. And then more importantly, how do you trade that range?
1 hour.
So if you look at the chart in front of you over here,
if he answers, let me know.
Bitcoin on TradingView on the daily time frame. Now the principle works exactly.
Cool. Why am I so... Dude, you have no idea. You cannot do that. I feel my blood pressure. You know how they have those heart rate monitors? That's what I should put on. It's all in good fun, cool. I'm chilling.
Exactly,
but I really do want to know how many
what we
triangles
learned
there are.
in finding the areas of support and resistance. You look
he's
in
got
for
an
the
hour.
pivot
Cool.
levels
It's
and
already,
the most
and I
amount
think
of
it's down
touch
now.
points.
Here, look at it.
So if we look at the data set that's in front of us, you can see over here, this is your stop and reversal points, right? That is your first one over there. That is an area of interest. That is an area of interest. That is an area of interest. And you basically want to mark off all those different levels. It's kind of like connecting the dots. Once you have the dots in place, you can now start to put your lines in and try and find the area of best fit. So the first line that I would mark off would be that one over there. And why do I have this level? If you look at the pivot level and you move your cursor all the way across, well, it matches up with this pivot.
Zenith, great question. How do you get access to this course? How much do you need to pay? You actually don't need to pay for the course. You need to deposit $100 into a Blowfin account. And when you deposit $100 into the Blowfin account, that's still your money, but you just get access to the course. So you can honestly deposit it, get access to the course, and then remove all the money. And then you could still just take the course, or you could like use some of that money to actually trade. And I'll drop you the link. It is right here. School.crypto. Oh, hold on. Second.
Level.
Good question.
It matches
Good question,
up with
though.
this pivot level, zooming in on the price action over there, as well as that one. And you can see the future price may reject or have a reaction from that level at a later stage. So that I've labeled as RH, which stands for your range high. The next thing you want to do is find where your range low could be. So very quickly, having a look at this chart, and I'll zoom in a little bit over here and scale it up. Where exactly do you think the range low could be? Now, I want to remind you or give you a hint. You're looking for the most amount of touch points available. So in this instance, I've marked off that level, right? It doesn't always have to be perfect. Remember, there is a certain element of subjectivity when it comes to this. Yes, we want to be as critical as we possibly can, but as a general rule, you're looking for straight horizontal lines, the most amount of touch points possible, and the line of best fit. So you can see price wicks into that level, strong reaction, bounces off, comes back down, almost tags it, fails to get back up, bounces slightly, loses that level. Look at the rejection into this zone over here, thus further confirming that this was an important level, fell back below, and then obviously continued up. So I'm happy with marking that off as a range low. And now you would expect, just looking at I value, where should your mid-range be? The mid-range is the next level that we want to mark off. Remember, we're trying to divide this chart up. We're trying to divide the top side, the bottom side, the middle, and then we're going to look for quarterly levels in between. Price tends to react off of these zones, especially when you're trading on a low time frame. You'll see how magical it can be. So mid-level, where would the mid-level be? Well, if I look over here, this has been a pivot level. This has been a pivot level. That's a pivot level. That's a pivot level. So let's put in the mid-level. And would you look at that? If you take out your Fibonacci tool and you mark off from the very, very top all the way to the bottom of the range, drag that across, you can see over there, your 0.5 level comes exactly in line with where we've just drawn that zone. So looking very, very good. That's one way that you can mark off the mid-level, is using that Fibonacci tool. Now we need to divide it up into quarters. Again, you can take your Fibonacci tool, take it from the top point to the middle to mark off your next zone. There you go. That is your 50% level. And then you're going to do exactly the same thing on the bottom side over there.
There we go. I hope you guys are paying attention, because I have not been paying attention because I've been getting this up.
Quickly put those
Kyle
in.
Ultimatum, he's got 58 minutes and 49 seconds.
You have both those levels now drawn in. Now that you have the levels drawn in, I've labeled it again: range low, range quarter, mid-range, range quarter,
but again,
and range high.
It's your money still.
You can see price action left the bottom of that range. When it comes to range trading, this is an important concept to understand. We call this a deviation. So this is a deviation whereby price leaves the range and then sucks back in like a magnet, ultimately confirming that the range does hold true, and you're looking to play price action between the top side and the bottom side. A reminder, this is the daily time frame. So this is going to be for higher time frame traders, swing traders, but the principles are exactly the same even on the low time frames. So if you're looking for quicker price action, just zoom in on a low time frame, and we will do an example of this in just a moment. Remember, this is going to be your discount zone, meaning that anytime that price is in the lower part of this region of your range,
Thank you,
you're
Sonia.
looking to buy. Anytime
I'm
that
back paying
price starts to
attention
get
now.
into the
I'm
top
locked
side is your premium zone, you should be considering selling or at least being cautious when getting into that area. When looking at the price action over here, you may be wondering, well, at what point does the range actually get established? For me personally, the range is already established once price action gets to this point. And the reason that I say that is you had a strong sell-off, which came from here. Price bounced off that level. That was one pivotal level you could have already marked out. Price then came up, was capped by this zone over here. You now have your first touch point is your candle over here. If I zoom in, touch point 1, touch point 2, and you have another touch point over here. When price came down for the major sell-off, you have your next touch point. So now, without even looking past that level, without even looking into the future, you can see already you have 1, 2, 3, 4 touch points. Price then moves up 5 touch points. At this point, you can say the range is mostly confirmed. And then if you allow price action to play out, you get the deviation, you break below. As soon as you break back into the range, you have ultimate confirmation. That would have been the opportunity to go long. So you would be buying on the break back into the range. And I'm going to show you on low time frames strategies that you could identify that. Price then continues to push back up. And now we're looking for a potential deviation on the top side. When we learn about liquidity in a future lesson, you're also going to understand the way that liquidity plays an important role on the extremities of these ranges. What I mean by the extremities, again, on the bottom side and on the top side, this is where liquidity gets stacked. Price has a way of gravitating towards that liquidity, and I'll show you exactly in a future lesson how to identify that. Now let's go into the 1 hour time frame so that you can see in real action how it would actually work on a lower time frame. Pulling up the chart over here,
lower time frame, we know we took a picture of it, right, and we sent it into here. So lower time frame would be day trading. So what type of time frames is he looking at? That's what we're going to be looking at right now, and it'll tell you like how long should you be holding this trade. What time frame you're looking at will kind of dictate how long you're holding the trade. If you're looking at a very low time frame, you don't like go into a position and say, perfect, I just looked at the 1 hour chart and now I'm going to hold this for the next 3 months. That's not how it works. You want to go and you want to, if you're looking at longer time frames and you see a trend over a long time horizon, that is confirmation that you can actually hold for a little bit longer. So I can't wait to hear what you say about
your price, right? It's been chopping up and down. This is the environment most people get taken out of the market. But the only reason for that is because they're not using the right strategy. When price moves sideways, you typically want to be range trading. And again, marking out our levels in a very, very simple way. You can see, you can mark out your zones. That is going to be your range high. That is going to be your range low. Price action comes into this zone over here, and that is going to be your mid-range. Remember the discount and premium analogy. So as price comes down here, we should be looking for opportunities to go long. So you can see the way that the wicks reacted. As price bounces off over there, you now have an invalidation point. You'll learn more about those invalidation levels, how to enter and exit trades in the future lesson where we cover stops, entries, and take profits. But let's continue with the exercise. We have our range now drawn out. Let's see what price does. Price is there pushing up, gets to the top side over there, rejects. As soon as that happened over here, that was a trade opportunity. I'm going a little bit fast. Let's drop the speed down and reverse it back slightly. So there we go. As soon as you get this candle, big push up, swing failure. What is a swing failure? Price failed to break out of that range. That is your confirmation. You now have a short trade. You take your tool, you enter into the short, your stop loss goes above that zone over there. You're looking to take the majority of your profit at the mid-range, but you can actually pull this tool all the way down to the bottom of the range. 50% of your profit taken there. Let the rest.
Oh, I think I glitched my computer. Hold on, guys. I'm trying to spam responses in Twitter to make sure that
run, and then you bring your stop into break even. Here's an example. Let's watch it play out. There you go. Price goes pretty much all the way. Let's run, and then you bring your stop. 50% of your profit taken there. Let the rest run, and then you bring your stop into break even. Here's an example. Let's watch it play out. There you go. Price goes. Here's an example. Let's watch it play out. There you go. Price goes pretty much all the way down. Will it finish the job?
Let me stop with Twitter. There we go. That might help. Although it says I'm not dropping frames. It could be the internet obviously has been a little bit spotty. There we go.
There we go. Price finishes the job. The short trade has
completely
played out to perfection.
Our boy Kyle
You're now looking to
he'll be here. He'll be here shortly. I DM'd him. Yudi does say best not to range trade in these market conditions if you're not experienced. 100%, guys. I actually want to say this quite a bit as well. We talked about it yesterday when Kyle did his live show, right? You don't need to be an expert in like all of these chart patterns. You don't need to be able to look at a chart and say, oh, I understand. That is the horizontal Mozambique. Like you don't have to do it. We saw, right? How many chart patterns and candlestick patterns and things like that there are. There's millions of these things. But if you can master, us together can master a few of them that are the most important, right? Again, it's like in poker. I bring poker into it. If you can play pocket aces correctly, you're going to make a lot of money just by learning how to play aces, ace, king, kings, your big hands correctly. Now, when you get down to like the pros playing pros, of course, you have to find an edge. You have to be able to play Jack 8 suited effectively because you're trying to just shave off tiny little bits of alpha on the fringes. We're not in the world where we need to do everything that happens. We don't have to range trade in tough market conditions. We don't have to do that. We can make a killing. We can make a lot of money just saying we are going to perfect one candlestick pattern, the pin bar candlestick. We're going to perfect angle trading. If you guys remember from the very first, we are angle trading experts. We are. We know the angles that it comes in at. And we're going to get one chart pattern down where we are going to be absolutely cooking. And then we're not going to overextend ourselves. We're not going to try to trade on something that we don't understand. We are going to be very profitable.
In the opposite direction, right? So immediately after
Zane
that,
says
you're
we're
looking
to
potentially go long.
The beautiful thing is, man, together we are perfect, but we don't even need to be perfect. We hit 60, 70%. We are already cooking.
The long trade idea, let's say if you get an entry, stop goes below that wick over there. You can move your entry point towards this level, and then same thing, playing it back towards the top and allow price action to continue. There you go. Entered into the trade. Immediately you got into that trade and allow it to continue to play out. See what happens. Okay, price is still going. It's still running. Almost stopped out at this point. It's okay to be stopped out. You continue to leave the trade. There you go. Take profit one has been hit. Let's see if price action makes it to the very, very top of that range. But this is an example.
Look at this. Even with all this stuff that Kyle's doing, right? All the charting, all the experience, all the analysis, he still has multiple different zones of taking profit. And that is such a wild thing when we're sitting here in memes and everyone wants to diamond hand forever and to the end. But he has take profit zones. So if his trade that is really well capitalized, really well set up, even he's taking profits on the way up. Cool. Made this, take profits. Made this, take profits. Made this, take profits.
You longed it to the top side. You're still in the trade. You've taken half your profits. You've now moved your stop loss at this point completely to break even. There should be no risk of a loss within this trade. And there you go, full profits. The trade is complete. Price actions above. And immediately, what do? You look to flip short again. And as you can see, you pretty much would have had that trade play out all the way back to the bottom. You guys get the idea. I'm not going to add in another short tool, but you would have shorted this right back to the bottom. And let's allow it to speed up a bit so we can finish that off. There we go. That's a complete trade. Now you're looking to potentially go long again. Breaks back into the range. Holds over there. That's exactly where price action is right now. As we speak, you'd be looking to go long and play it back to the top side. So here's an example. You had 3 trades within this one tiny little range over there. That was your next entry. Stop would have gone above there, shorting it all the way to the bottom of the range. What are your risk to reward ratios over here? Pretty good. This one was a 4.28 to 1 risk to reward ratio. This one over here, great risk to reward ratio as well. And then this one over here, we had a 2.3 to 1 risk.
Okay, I have a question for Kyle here that I think you guys are going to appreciate. Hold on, I got to make sure that up correctly. It is. I do this all on the fly, so it's nice and fun. Okay, so on the notes section, some questions for here. Let me go here. Questions for Kyle. Okay, here's my question. And tell me if you guys think that this makes sense. When you are talking about a risk to reward ratio, I feel like it's not being, not that it's not being calculated correctly, but I think that it is. I think that it's okay. So he's saying the risk to reward ratio is on a short position, let's just say. So here's this box here, which is his risk, and then here's the reward. And he's saying that the delta here, this could be like 4x your money, and this is like 1x loss, right? You lose all your money here. And we're entering a trade here, let's just say. So we think that it's going to go down to here. That's 4x, right? Stay with me. I'm going to try to explain this correctly. We think it's going to go down here. If it does that, we get 4x. So if we put in $1, put in $1 here. If we put in $1 and we're correct, we get $4, right? And here, if we put in $1 and we get stopped out, $1, and we get stopped out, then we get $0 back, right? So when he's calculating this, though, when he's just saying like this risk to reward ratio, though, it's not exactly this. First of all, we have to take into account the actual probabilities that this happens, right? And so if we're a 60, 70% trader, let's call it 70% here. Let's call it 30% here. So then all of a sudden now the actual equation, we have our expected value equation. This is something that if you've ever played poker, you will absolutely know, or taken a stats class or anything like that. We have our money when we win, which is going to be 0.7 for 70% times our $4, because that's how much we make every time we win, is this $4, right? And we win 70% of the time. This is our 70%. Yep. And this is how much we win. Okay. And then we will plus, we'll add whatever it is when we lose, which is 0.3. And when we lose, we make $0, right? Because we lose all of our money. Okay. So the overall expected value of this, obviously this is just 0 here. This is 0, right? So then we just have 70% of $4, which is what? Is that $2.80? I'm just doing it kind of quick. Is that right? You guys can fact check me, I'm sure. $2.80, right? Now, scroll down just a little bit more. Okay. Yeah, so this is really good. So we put in $1 and we're returning $2.80. Now, the thing though is that's like a basic calculation off of this. However, if we make this same thing happen, I don't want to overcomplicate it, but this is actually important to know. And there might not be too much that we could do about it, but this is the question that I want to ask Kyle. Is now we have our same box here. We're going to just do the same setup. So we have a 1x loss here. We lose all of our money here. And we make all of our money here. 4x. 4x here, right? That yields this same equation. But now if you put in take profits at different levels, and we put in one take profit here, this is take profit 1. This is take profit 2. Let's just say we have 2 take profit levels. And then we close out the trade down here at TP3. Now this equation gets much more complicated, right? Because now when we win, it's not just 0.7. It's not just this part of the equation. It's not just 0.7 times 4, because we're not getting 4x at every time. If this is at a 2x, this is at a 3x, and this is at a 4x down here, well, now the equation has to take into account these different steps that we're getting and their percentages as well. So this is still 0.3 times 0, which, by the way, it doesn't have to be 0.3 times 0. It could have stop losses here as well. But my question for Kyle, I'm not going to write out this formula because it's not really relevant, the formula, but it's just to paint the picture that when you win, it's not like you just get a 4x or nothing. You get, it's going to be something like Can I type? Is there type here? Oh, here we go. Okay, I'll do it like this. That's going to be easier. But you guys can't see that, so let's bold it, and let's see if we can't make it bigger like that. Bigger size. 6. You see that? Yeah. Okay, I'll do it right here where you guys. All right. So now our expected value is equal to, let's say we have a take profit at 2x. We have a take profit at 2x. And that gets hit 50% of the time. 0.5 times 2. We have $2, right? Plus, we get down to the 3x. We get there. Let's just make this for a little bit easier sake. Let's make it 0.4. 40% of the time. We hit this one 20% of the time is our 3x, right? Plus, we hit the very bottom of our 4x. We'll hit that 1% of the time times $4 plus what we lose when we lose, right? Which is 0.3 times $0. So now you add all this up. This is what it is. This is what it is. And now you get a different number. So you get like 40% of 2, which is $1.60. You get 20% of $3, which is what, 60 cents? So $1.60 plus 40 cents. So 60, so that's $1 plus $1.60. So now it's $2.60. So it's no longer $2.80. Now, Dracul brings up a good point. The risk to reward ratio, also you get your money back, your initial investment. He's right. So if you're risking, this is definitely a core poker strategy. If you're getting 3 to 1 on your money, so let's say there's $18 that you can win, and you have to put in $6 to win the money back, right? You only have to be right 1 out of 4 times to break even. So Dracul is correct in that sense, 100%. So if you're getting a 4 to 1 risk ratio, it does mean a 5x because your initial funds come back. So you only have to be right 20% of the time, 1/5, not 1/4. But the point is, so here's going to be my question to Kyle. Here's how I'm going to write it. Questions for Kyle. When you evaluate risk to reward in some of your videos, you put it as if the trade fully completes, right? Like he said, completes, and you full clip everything at the highest take profit. Take profit and stop loss, right? However, you also talk about setting take profit zones along the way of the trade, which would mean that a certain percentage of the time you are taking profits before you reach the top or bottom of the trade, meaning the overall risk to return ratio needs to be slightly adjusted, but it is material. Okay, I'll word that better, but I wanted to walk you guys through that. I know that got a little bit boring. I promise I'll let him run here a little bit more. But that's an important thing to think about, because it's kind of like Dave Ramsey when he says, oh, you make $100,000 a year and you're $100,000 in debt. Just don't spend any money for 1 year and you'll be out of debt. No, because I have to pay taxes. Like, taxes immediately come and take 30 to 40% of that. So I actually only make 60%. It drives me bananas. I hate Dave Ramsey with a passion. Sorry. It is what it is. People call in and say, I have $1 million in debt. And he says, how much money do you make? They say $250,000. He says, okay, how much money do you spend? I spend $50,000 a year. Okay, so you make $200,000 a year after your expenses. So you should be able to be debt-free in 5 years. No, because they take my taxes.
To reward ratio, so both favorable. You remember from what you learned in the risk management section that is a favorable risk to reward ratio. If you understand your hit rate, you can run a 1 to 3 risk to reward ratio, even a 1 to 2 risk to reward ratio every single trade, and you will still be profitable over time.
This has been a dense section, super dense. We may need to do like a review.
In this video,
and we've been having a lot of fun. But you got to keep it fun,
identify a trend. So if you consider the example in front of you over here, we have a breakout from the prior range. We just covered ranges, so you know exactly what to expect over there. Then price pushes right through that level, breaking structure, creating a higher high. It retests that level of support and then creates the next higher high, followed by another higher low. And so that trend continues, hence the word trend, right? You can put in a very simple trend line over here and you can see that price is generally moving up over time. That's the key word. It has to be consecutive high.
Well, why is it paused? Don't do this to me. I don't know why my computer does this. I feel like my computer is more than capable of handling this. I think this is an internet connection thing. I'm like hardwired in directly to the mainframe. I don't understand why it does this. Usually I would blame Twitter, but this is not a Twitter thing. We're going to allow going here. Let's see. I'll pull up
higher highs and higher lows,
task manager,
backed by momentum, right? So price is backed by momentum, and consistently over time, it's creating multiple higher highs and higher lows. That is your criteria for an uptrend. The same is true when you look at a downtrend. Here's an example of a downtrend. Price is capped within a range. It then continues to consolidate, breaking through the bottom of that range to start what could be a downtrend, right? Creating a lower low. You then create your next lower high, followed by the next lower low. You now have consecutive low lows with the next lower high. Consecutive low lows and consecutive low highs. That is officially the beginning of your trend, and that trend continues. Using a simple trend line, you put that in over there, and generally speaking, price is moving towards the downside. So that is an uptrend, that is a downtrend. It's really as simple as that. You don't need to overcomplicate it. Now, where people get confused is on the real charts, looking at live charts and multiple different time frames. So we're going to have a look at the live charts, and I'm going to show you a couple of very easy ways in which you can identify the trend so as to avoid that noise and confusion. Having a look over here, we have Bitcoin on a high time frame chart. This is a 3-day chart, and just at eye value, I want you to simply just look at the chart and ask yourself, this section of price action over here, which way is that generally going? I'm sure many of you can identify it's generally towards the downside. That is the point of using a trend line. Trend lines help you to gauge the direction of the price action, and a trend line doesn't have to be perfect, right? It's generally to help you identify the direction. And in this instance, it's moving quite clearly towards the downside. So let's make that nice and big. General price action towards the downside. Now it starts to move sideways over here. We just covered ranges, so you understand ranges. Price then ranges. Once it leaves the range, it starts to establish what would be a new trend. And you can see clearly it's going to be this section here, right? Higher highs and higher lows. Again, if you are confused, just use a simple trend line, and you don't need to overcomplicate it. You put that in over there, touching as many pivot points as possible underneath the price action. There's your lows, higher low, generally moving towards the upside. Do the same to make sure the same is true on the higher highs, and you can put in that trend line over there, touching the major pivot points. If you look over there, there's your first high. Look at the next one. It's higher than the first one. Your third one, higher than the second one. So generally speaking, the trend is moving up. Higher highs and higher lows persist and continue, and therefore, this is a primary example of an uptrend. Now, many people may get confused on where these uptrends begin. Now that you understand how to recognize a trend, in the next video, I'm going to be showing you how to find the very beginning of that trend and how to identify when there's a break of structure.
All right, nice. I wanted to let him cook a little bit on that one because we paused quite. I'm having a blast.
In this video, I'm going to show you how to identify the start of...
I have way more fun hanging out with you guys than anything else. Trust me, I go on some spaces and work on some other content. This is definitely the most fun I have, so I appreciate you guys all being here. Shout out to each and every one of you. But I did want to let him cook just a touch longer there because, you know, we've been pausing it. I want to let it run, and we'll comment when we need to, and talking about breaking of structures and things like that as well. You know, I want to get to our test And then we've got 33 minutes. I don't know what we're going to do.
Trend
if it goes
where the
33
break
minutes
of
and Kyle
structure
comes,
occurs, which would be your signal to get into that trend. And I'm going to show you what to look out for so that you can avoid getting trapped by entering too early into that trend. Let me show you an example with a quick drawing. This is what it would look like. So if we use our tool set over here, price action was moving down, creating lower lows and lower highs. There's your next lower low, lower high, lower low. Now, what may happen in trading is you often get a big push up, right?
The good news is, Zenith, a lot of people don't know what they've been missing. Like, especially if you've just been in meme coins and the trenches for a long time. That's like where I was at as well. But I traded before that. But like people who are just in memes, you got to trade the trenches differently. Like some of this stuff applies to the trenches, but not exactly. When I see people putting charts and it's like a 50K pump fund project that just graduated off the bonding curve, and then they're drawing some lines and they're like, oh, look at this. You know, we have a structure. We have a head and shoulders, a cup and handle. It's like, guys, there's $3,000 of liquidity in this project. I can buy $1,000 worth and send the chart to 100K. There's no charting that needs to be done because that's not the point. The point of a meme coin in the trenches is you get in, you take a risk, you gamble a little bit, you get some profits out, then you try to build a community.
Once price action closes over here, this is like it's going to be clearing the level on the left-hand side, making its first higher high. We call this a break of structure. And I'll show you an example in the other direction too. But let's first focus on the upside break of structure. Price closes there, comes back down. Sometimes it can create a trap type scenario where it creates an immediate lower low. This is why you don't want to buy the first higher high in the trade. You don't even want to buy the first higher low. The first higher low could take place over here.
Yeah, this is massive alpha, so I want to pause it here just one sec. I'll be quick. I promise to all of you. Thank you guys so much. He said you don't want to buy the first higher high. When what Kyle's talking about here is you want to increase. Remember that chart that he showed where it was like your strike rate and profitability? He cares more about being sure when he starts entering these trades to increase his strike rate. Even if it means you might not make as much money as if you were in the first one, it doesn't matter. You want to see it. You want to confirm it. Then you enter the trade. Now you're hitting at a 60, 70, 80% rate, as opposed to, I'm going to guess that this is a higher high, but I haven't allowed it to play out and confirm. TEDx says he used the same strategy on GOAT. Yeah, you don't have to be the first. Even in the trenches, that works. You know how many, I could shield 1 million trenches a day. I do. Pre-sale this, do this, that, whatever. And oftentimes people come and say, oh, I shielded to you at 400K. Now it's at 1 million. Now you buy, you're late. No, I don't care about getting in the first. I don't want to be the first person in. I don't need to be the first person in. I want to make sure that I make the most money. So if it goes to 1 million and now I know, okay, cool. The team is able to do some things. They actually do have connections like they were talking about. They're able to pump out animations. The community is growing. People on the timeline are engaging with it. The narrative actually works. Now I can attack it at a different level. I can hit it with bigger size. I don't need to be the first one. I don't care. Do you know how many projects there are that you're going to have an opportunity to play? You don't need to hit I need to make the most amount of money more than everyone else on this trade. Let it confirm. That's what Kyle's saying. Don't need to play the first higher high. Let it play out a little bit. Confirm that the trend is up. Then you enter the trade. You actually win at a high level, and you could hit it with more size.
And then you might end up getting another lower high.
Make more money than everyone else.
Your previous lessons, I don't care what everyone else makes. What does this look like to you?
If you all make 10 million and I make 5 million, I'm not going to complain. Trust me.
Well, from the prior lessons, you can see this is a head and shoulders pattern, right? So let's quickly redraw that chart for you and see where you would get your entry. Lower highs, lower lows, break of structure. You cleared the left-hand side. That's your first higher high, first high low, second higher high, second higher low. This would be the earliest point that I would look to gain an entry, would be over there. And using your trend line, what do you see over here? Generally speaking, price is moving in an upward direction, you have a support level to work with. So when taking a trade, it would look like this. Let's grab our risk to reward tool. Your entry would be on the second high low, would be your first and earliest point to enter. Your stop loss would go below the prior higher low, which is that one over there. If price goes back below that level, you're incorrect on the trade idea. And let's just pretend that your next major resistance is coming up at this level. This is what the trade would look like. So ultimately, your expectation would be that momentum would continue in the upward direction, because trends continue until such time as structure is broken. Structure was just broken over here to the upside for the very first time, creating your first higher high in relation to the left hand side over there. There's your next one, high low, higher high, enter the trade, stop goes below here. Price action should continue into the next higher high, and then you can continue to scale into that position. If it rolls over from here, creating a lower high, you can be cautious, raise your stop loss back into break even to reduce your risk, because there's a possibility it's going to go down and take out that level. Therefore, you can already remove the risk out of the trade. All right, now let's consider when price action moves in the opposite direction. So you have an uptrend which is coming to an end. Higher highs and higher lows, higher highs and higher lows. Price continues up, and for the first time, you have a change over here. You have a break in structure, right? Let's quickly pause that over there. Where is the break in structure? Well, this was your last high low. You've taken that area out. Let's zoom in for you. You've now taken this level out. This is a complete break in structure. Price went lower. You don't enter into...
This is where you hear people say higher highs and higher lows and lower highs and lower lows quite a bit. This is what it means. Some people just say it. Trust me. They draw some things on a chart, they take a screenshot, and they say, look, higher highs and lower lows. Or higher highs and higher lows. And they just say something. They just say some gibberish, right? That's why we're going to be bulletproof. You're not going to be able to come at us with that weak sauce, take a screenshot and draw with your finger arrows going up, because we know better than anything. He's telling us how to show a structure breaking down.
To a short trade yet.
That's
you wait to see what price action does next in case it goes higher. In that instance, if it did this level at the bottom over here would be a trap. This would be a trap scenario. So you wait for price action to complete the first lower high. Boom. Now you're interested. Wait again for the next lower low. That's your second lower low. Where do you enter? On the second lower high, which is over here. Enter the trade, and the trend should continue. This would be your trade setup over here. Grab the short tool, enter into the trade over there.
I'm telling you, one thing I want to find, which I will find for all of us, is there has to be some type of automation that finds these patterns, right? Because you can't just look at a million charts a day and say, okay, I found this structure breakdown. There's got to be AI that goes through charts and at least will put them in front of you and say, I've identified, you like give it, hey, I want you to track these charts, Ethereum, Bitcoin, Solana, Sui, Amazon, Apple, give you like kind of these charts and say, what I want to know is when a chart starts to break down, when I get 3 higher highs and 3 higher lows in a row, let me know. Shoot me a Bitcoin dip. Okay, cool. Now I can go look at that chart a little more closely, right?
Yeah.
It's got to be out
loss
there.
Goes above
if it's not, we'll build it, then we'll just get rich.
High, and you're targeting your next major resistance zone, or in this instance, your next major support zone, because you're playing the market to the short side. Now let's have a look at the live price action chart over here with the candlesticks. I want to give you an example of how you can make this a lot cleaner and easier for yourself. Remember that when you're looking at the candlesticks, you have the body of the candle as well as the wick. Now, the body of the candle has much higher significance and importance.
Hey, we know the body is important, and in horizontal, you connect the bodies, and in uptrend, like ranging, diagonal trend lines, we know that you could use wicks. He's using that here.
Then what the wick of the candle has. So in order to clean this chart up and avoid the noise, it's especially...
Zenith says, share when I find it. Drakul said there's a ton of indicators on TradingView that you can, that I'm assuming that means free to use. He says fee to use. I'm sure there are many that have fees to use, but this one also, there's probably a lot of free to use indicators that will then pop up and show up. We'll go over that a little bit later. Not today, but later as we learn.
Actually useful when you're on a super
cool.
low time
You're like
frame,
a wealth of
like
knowledge,
a 3-minute, 5-minute, or 15-minute chart. All you need to do is go to your candles on the top over there, click the candles, move it onto a line chart, and that will give you a much more clean look. You can see it a lot cleaner over here. There is your first higher high. How do we know that this is the first major high and a break of structure?
Cool says free.
Again,
so
look to
cool. I knew
the levels on the left-hand side.
A lot of free indicators on trading.
This was
absolutely
your last
going to be good. We're going to use those. We're going to find the best
so here's
ones.
your lower highs.
Sure
here's your next lower high. You got 1, 2, 3. Price action now pushes up, breaking that structure, creating the very first higher high. Here's your next high low. And there you go. You can see the trend continues towards the upside.
I don't think I'll ever get over that whale sound.
Let's have a very quick recap of everything you've just learned about.
All right, we're going to get a recap. Now, I will say, after the recap, we get the test, boys and girls. 22 minutes. That's what Kyle has. I haven't looked. Maybe he's answered. But also, I think that he is... I can't dox him. I know where he lives, though, and I'm just going to say it's not... well, I mean, he is doxed. I don't know if his location is doxed. I'm just going to say it is late for him, so he might not be checking. He might not be completely degenerate like all of us, right? But I was gonna say I'm gonna need some help on this quiz because I've been like managing. I've been trying to tweet. I've been trying to text. I've been trying to manage the screen, which I do not mind at all. But I will say I think there's some individuals in the chat who are very likely to have better answers than I have.
A reminder: the market moves.
What was that? How much money did we just cook? Guys, look at our portfolio value. It's going to be rich.
Phases. It ranges and it trends. You might see an uptrend, which then moves into a downtrend, and then it gets caught up in a range, and then starts a new uptrend, downtrend, range. And so this pattern can be found over and over again across multiple different time frames. So your job as a trader or investor is to spot when price is within a range or a trend and find your trade opportunities over there. So as a reminder, if we have a look at this slide over here, this was your range. Remember, a range is where price is caught between two important areas, a horizontal region of support and a horizontal region of resistance. And it oscillates and bounces within that zone, providing multiple trade opportunities until such time as it breaks out of that. Once it breaks out of that, it may be the start of either a new range or it could possibly be a trend. If we look at this example over here, you can see this breakout led into an uptrend. A reminder, an uptrend is a series of higher highs and higher lows found consecutively over time. A reminder, as a trader, you would not look to be buying the very first higher high or higher low, but you would be more interested in buying the second one, thus waiting for confirmation. The same is true on the downside. If price action breaks to the downside and you see a series of lower lows and lower highs, you're never going to buy the first ones, but the earliest that you would get in would be on the second one. So to conclude, a very helpful bit of advice would be to stick with one time frame. Whether your edge is mostly found on the daily or the 4-hour, practice looking for these patterns, practice looking for these ranges, and practice looking for the trends on that particular time frame only until such time as you feel comfortable to start to incorporate other time frames. And the reason why I say this is because you might see an overlap within these time frames. What I mean by this, well, you might have an uptrend on a daily time frame whilst on the same point in time, if you move the chart to a 4-hour time frame, price is caught up within a range. And this is why it's so important to master one time frame at a time, and then you can start to move on to other time frames. Now, in the next lesson, I'm going to be covering moving average strategies as well as exponential moving average strategies. These are strategies that trend traders use to time your entry into the market with a much higher level of confidence and accuracy. So stay tuned because I'll see you all there.
All right, guys, here we go. It's time. It is time. Okay, here we go. We got to move the chat. Hold on. We're going to move you guys over here. We'll make it bigger so we can see. Kyle's got 18 minutes. Answer. All right, here we go. In which phase of the market does a range form? A jumpstart, a downtrend, an uptrend, or sideways? In which phase of the market? I have my guess. We're going to let it cook just a little bit, especially because we need... This has been a fun session, honestly. I've had a lot of fun with you guys today. We need to get these answers right, though. Let's see here. I have my thoughts. In which phase of the market does a range form? Sideways, D it is. I believe it's got to be. Much love to you as well, Sadu. Aladdin says D. TEDx says D. Mac, D as well. So we're going to answer D. So Zenith, I think that it forms... we're going to go sideways here. I think that it forms sideways because remember, it goes up, it goes down, and that's when it's like ranging. It's like bouncing back and forth. I think there's some that can form, of course, in the up and the down. But if it's the trend, if it's in an uptrend or a downtrend, it's already formed, if that makes sense. So if you have it where it's already... If you have it where it's already at like a point like this, if we have it going down like this and it's bouncing like this, then we already have a trend, right? The trend is down. So it hasn't formed because it's already formed. But when you have it like this, where you have sideways, and it's going like, okay, what is happening? The trend is forming. It's deciding, are we going to go up or are we going to go down? And I realize that the chat is covering this now, but we'll get rid of it for 1 second. Is it going to go up or is it going to go down? So this is where it forms. This is where it's already formed. So we're talking about a trend. So this is the trend. So you know what I mean? Like it's already happened. This is where it is happening. And that was what the question said. But I was kind of with you on that too. All right, we're 1 for 1 though. Continuing on. Bring up our chat back up here. Go. Okay, I'm going to move chat for a second because it's covering part of the question. Oh, we're not forgiving Kyle. He's got 15 minutes. Going down. True or false? An uptrend is a series of lower highs and lower lows found consecutively over time. So true or false? An uptrend is a series of lower highs and lower lows found consecutively over time. Shout out Tony Montana, WAGME. I am doing the Solana series, the definitive guide. I do have a video on WAGME in it. I'm just waiting for the animator to clean it up and put some subs on it, but I have recorded like 14 videos, and I think I have a couple more that I have to do. I'm seeing some falses in there. Yudi says false. Aladdin says true. I think that this one is false, right? Because an uptrend would be higher highs and higher lows, right? An uptrend is higher highs and higher lows, meaning it's going up. If we have a series of lower highs and lower lows, that means that we are going down here. Go. I'm loving this paint thing, by the way. This is where it's at. I don't know why more people don't use paint. Why is this not like the most used thing? So if we have, think about it. So it says an uptrend is by lower highs and lower lows. So uptrend is like this, right? Going like this. And lower highs and lower lows would be, okay, we have a high here. Okay, here's the low. Then the next high is here. Then the next low is lower. Then the next one's here. Because they each have to be lower. It's opposite. That's a downtrend. Boom. Confirmed, boys. So wait, did we say false? Okay, I get tricked by these things. An uptrend is a series of lower... No, so that's false. No, it is not. Oh, I didn't get to show you guys us getting it correct. No, paint was up. God, it is so hard to do this. But we did it. We got it right. I promise. What is range trading? So, I'm going to have to hide the chat here for just a second. Is range trading a series of higher highs and higher lows? A series of lower highs and lower lows? A sudden spike in price? Or when the price is caught between two important areas? a horizontal region of support and a horizontal region of resistance. So we remember very back when Kyle made his chart and it was up 10%, down 10%, up 10%, down 10%, up 10%, down 10%. That was going in a horizontal range, I believe, unless anyone disagrees. Say that we are very clearly in the D section here. Check it out. What do you guys think? We good with D? Sir, just waited for some confirmation from the people. Man of the people, of course. They said D. I agree. When should a trader ideally buy during an uptrend? First higher high, first higher low, second higher high, second higher low. Ooh, this is a good one. I have my thoughts, but I want to hear what you guys have to say. So thinking about it, we're in an uptrend. First higher high, first higher low, second higher high, second higher. I think we can get this one. I believe in us. I'm checking to see if Kyle's gotten back to us. What are we thinking here? I see some D's here. That is kind of what I was thinking. What do you guys think? Second higher low, Drew Cool, TEDx. I mean, we got so many good people saying second higher low. I did see B, first higher low. Aladdin, that's actually not a bad answer, right? But if you buy on the first higher low, you will make more money, assuming you're correct, right? But we buy on the second higher low to wait for confirmation, to make sure that we're doing it in the right way. Dude, I just said it, and Drew Cool just said it. That is ESP level telekinesis connection, whatever you want to call it. Shout out to Drakul. We don't FOMO over here. No, we do not. No, we do not. All right, here we go. Moving the chat just a little bit so we can get this answer. Which of the following patterns can be found repeatedly across multiple time frames? Spike, downtrend, range, or uptrend? Oh, choose 3. I was about to say, I was like, okay. Okay, so we need to choose 3 here. Which of the following patterns can be found repeatedly across multiple time frames? Well, a spike is just a one-off thing, right? So it can't be spike. And we have to choose 3. There's 4, and it can't be A. So is it BCD? Is that it? I think it's BCD. And unless I'm completely tripping out, I don't believe Kyle has responded to us yet. I don't know what we're going to do. We're going to send in the troops. Maybe we'll give him like a grace period until tomorrow's session. Maybe we'll force him to come on the session tomorrow and teach us. Yeah, I think it's BCD. I'm doing it. B, C, D. Okay. Boom. Guys, we're cooking. Is it recommended to master one time frame at a time before moving on to other time frames? I did not see this part, but based on our conversations, I would assume yes, right? Don't we want to master one before trying to go out and do a bunch of other stuff? Yeah. Cool says BCD. Yeah, I think you're a little bit delayed because we just did get that one, but I appreciate that one. Yeah, Yudi says obviously. Yeah, some of these are obvious. You're cool finding like-minded people, man. Me too. If you find like-minded good people in crypto, you're going to make money. It literally is what it is. Some people think the alpha is just like finding the chart and being able to read a chart, but the alpha is like connecting with good people too. Absolutely. This question, what is the significance of the body of a candlestick compared to the wick? Ooh, I know this one. I'm not going to say. I'll let you guys chill for a second and figure it out. The body has less significance than the wick. The body has higher significance than the wick. The body and the wick have equal significances. Neither the body nor the wick have any significance. Yeah, Drew, cool. It's all good. I know that it's delayed a little bit. I don't have a delay on the stream, but you know how it goes. Maybe over your connection or maybe my outputs, it could be lagging a little bit. If you refresh, I think it will pick it back up to live, by the way. Like if you guys click refresh, it'll come back. Pretty sure. So if you guys do that, it'll bring it back up to speed. But for now, we are looking at what is the significance of the body of the candlestick compared to the wick. Cool says higher significance. Beauty has a bit of a lag too. I know. I think that that's more of a X thing than anything. But I guess I neglected the poor people. And there's no one in YouTube anyways. We got one viewer. Whoever's in YouTube, shout out to you. You're goated. It might be me. Who knows? But yeah, we'll wait till tomorrow to get Kyle. Maybe we'll get him on. I'm sure he'll come on, by the way. He's super cool. The body has higher significance than the wick. That is what Cool says. I 100% agree with this. The body is more important than the wick. The wick is just like, you know, a few people bought. Yeah, I don't know. I don't know if I can get him on tomorrow. I don't know what his schedule is. So I'm going to have to DM him and see what works. What works. Here. I was wondering if he's DM'd me. But like I said, I think it's late there where he's at. So it might not through. Nope. No. I was trying to see. Nobody. Okay. We still cook. A trend line helps you gauge the blank of the price action. A trend line helps you gauge the direction, the intensity, the volume, or the speed. Except maybe a pin bar in the case of a pin bar. Yeah, actually true. Cool said the body might not have as much significance in the case of a pin bar candlestick. I actually agree with that. We know all about. We are the pin bar experts. Max says A. I believe he's correct. Cool comes in with the confirmation. This is the beauty of it. Even we could probably do a test of like anything. Have you guys seen those tests that people have been taking that are like wildly hard? Maybe we'll try one of those. We'll try one of those one of these. You know the ones I'm talking about? The like, I know they're not really, but like the alleged CIA tests. 5 for 5, boys and girls. We did it. We are not going to start the next lesson now, but useful tools and resources. I'll make a link to it, and I'll get a tweet out on it. I'll actually put a note that we need to do this so that we can set it up, because useful tools and resources, this is what I want to see a lot. I want to see the useful tools and resources because that's what, like, I want to be able to set it up, you know, trading view, things like that, and the tools that we can do, the fibs, all these fun things. So we will watch this one tomorrow. I will be same time, same place. So roll the clock back about 2 hours, and that's when we'll do it. We're going to wait, though. We got 5 minutes. We're going to give Kyle 5 more minutes before he tells us, but we're going to go. Oh, yeah, if he doesn't trade, guys, we're cursing. The monkey paw curse. You guys know the monkey paw curse? That it's in like Phasmophobia. I don't know if you guys play games, but Phasmophobia is a game where like you go hunt ghosts and you can get different items that can help you along your journey. And the monkey paw curse is from a book, I believe. And it why are there 2 chats here? That's weird. Is that from browser? It is. But the monkey paw curse, it like helps you achieve your goal, but there's a cost to it. There's a cost to it. While we are waiting, let's bring up Twitter and we'll just see if our boy is gonna come. Where's Twitter? Is here. Text stopwatch. I'm just trying to find the right sizing here. And Twitter, it'll be this one here. Here. Make it just a little bigger. We'll scroll through Twitter and see what people are kind of talking about today anyways. All right, there we go. So what's going on the timeline? Let's see. Can we go to profile here, and we'll go to this one. All right, we're looking. Let's go. We need answers. You're darn right we do. Or we're going to revolt. Need answers now. Clock is ticking. I don't see him in here, guys. I don't see it. You guys did a great job, by the way. You guys did a great job. You rated this, and he has no hope now other than to come and join us. He has to. There's no way. You can't get away with this. What's that meme where it's like the Breaking Bad meme that like you can't keep getting away with this? See if I can find it. You can't keep getting away with. Actually, here, we'll see if we can't find it on. No, not that. What? No, these are not the memes at all. What is this search? You guys know the one I'm talking about. It's this one. It is this one here. You know this one? Where is it? I'm trying to show here. Hold on. You guys know which one I'm talking about. We can make our own. Wait, we can make our own? Okay, guys, hold on. He's got 1 minute, 20 seconds. 27 seconds left. We got this. We can create our meme. I want to create my own. How do we create our own here? Caption this meme. Oh, yes. Let's do it. Okay. Top text. When Kyle Oops asks a question in whale course about triangles. Is this too much? How do we do this, guys? Yeah, Dracul adds a lot of value to the banana zone. We'll get you guys the link. And I can't wait to talk to Dracul about indicators as well. We'll set it up too, so one of these courses we can actually ask the questions and then doesn't answer the question. That's too much. We can't do this. I was going to tweet this at him. 16 seconds, guys. Not looking good. Not looking good. We did it. 9, 8, 7, 6, 5, 4, 3, 2, 1. Is it going to ding or something? Oh, it is. The bomb is going off. Guys, I don't know what to say. He didn't make it. There has to be some punishment. Let's go check it out here. Yeah, 2, 1, TEDx, you got him. We revolt tomorrow at dawn. Okay. Yeah, let's go back to Twitter here. Leave that. Twitter. Profile. Scroll down. Here it is. Did he get it in just in time? No, he did not. Didn't do it. All right, we've got some things here now. I'm gonna take this as a note for our next question for him. Questions for Kyle 2. You asked a question about how many triangles we saw in an image, and then you never answered. And then we spammed you with tweets and a 1 hour countdown, and you still never came. What do you think the appropriate penalty should be on you personally, inflicted by the banana zone to remedy this situation? Also, How many triangles were there? Question mark. Okay, I got a note. I've got the next question for it. Telegram link? No, I do not mind at all. Let me find it here. What is... We get the banana zone. You group info. Copy that link, and I'm going to drop it here. There you go. That's the TG if you guys want to get in there and hang out and say hello and have some fun. There's a lot of really cool people in there. Again, I have no problem saying it. I think Dracul is one of the more knowledgeable traders in there. I know Ted has had some really good thoughts. I feel like I'm still kind of on the learning side. Crypto the Kid is in there cooking a lot of stuff constantly. So there it is. Get the link because I'm going to be rugging the stream here in a little bit. Wait, it says I don't follow Kyle. That's a scam. I absolutely follow. Okay, well, but whatever. You know how X does its thing. So anyways, you guys, well, I think that I'm going to rug it there. It's been a super fun session. I feel like we learned a lot of really important stuff. I'm going to go back and review it again off the table, you know, when I can put a little bit more focus onto it. But it was a ton of fun. I really appreciate you guys joining in. You guys make it fun. I'll keep kind of trying to go out and get some giveaways for the community so we can all make more money together. There's nothing better. I will say trading's great, but there's nothing better than absolute free money. So we'll get Kyle on here. Don't worry. This will be solved. I think it's 27, but we're going to solve this once and for all. Zenith, Orion, Murtala, TEDx, Dracul, Aladdin. I know I saw Mac in here. I saw Yudi in here, Wanderer. We went 5 for 5 on our questions. It doesn't get much better than that. So appreciate each and every one of you guys. I will catch you guys on the next one. Again, roll your clock back 2 hours, 11 minutes, and it will be the same time, same place tomorrow. I'll get the link out and we can make sure that we get those reminders set. Thank you guys. I appreciate it. Going to rug it here. I will catch you all on the next one. Peace out, guys.